Okay, let's dive right into this. Have you ever honestly wondered how some people manage to pull a consistent, reliable income out of the markets, while everyone else seems to be caught in this endless, agonizing cycle of blown accounts and constant losses? Well, welcome to today's Explainer. We're going to radically shift your perspective on the markets today by unpacking the core philosophies from a truly brilliant piece of source material called the Zen Trader, which is a resource entirely dedicated to mastering trading psychology. But listen, we aren't just going to talk in the abstract today. No way. We're going to apply these lessons to a very specific, tangible journey. My journey. I'm going to share exactly how I shifted my own mindset, my technical preparation, and my daily routine to finally start generating a steady $2,000 a month in trading. Seriously, for years I struggled so much. I was that person staring at charts at 3 a.m., completely stressed out, just pulling my hair out wondering why all my hard work wasn't translating into profits. So, whether you are a complete novice or someone who's been struggling for years to find consistency, just like I was, the insights we are about to explore will absolutely change how you interact with the charts and how you approach your own financial goals.
So there is this incredible paradox right at the heart of trading. Think about it for a second. In almost every other aspect of life, whether it's getting through school, building up a business, or climbing the corporate ladder, your intelligence and your sheer brute force hard work are directly correlated with your success, right? If you want to earn more, you just put in more hours. You grind, you hustle. But the source material highlights this incredibly harsh reality that honestly took me years to accept. Smart, hardworking people constantly fail at trading. I mean, I had a great education, a really strong work ethic, and yet the market just kept taking my money. Why? Because the market doesn't care about your degrees. It doesn't care about your background. It doesn't care how badly you want to succeed. And it definitely doesn't care how many hours you spend hyperfixated on a glowing screen. In fact, applying that traditional grinded-out hard work to the financial markets usually triggers these deep emotional responses, things like stress, fear, and greed. And those emotions actively destroy your capital. It's basically a complete inversion of how we're taught the world works from the time we're little kids.
Section 1. The Profit-Chasing Trap. Why effort backfires.
Okay, so when you approach the market from a place of need or impatience, especially when you're trying to force a specific monetary goal like that $2,000 a month, your effort actually backfires completely. The Zen Trader material calls this chasing profits. And man, when I first set my 2K goal, I tried so hard to bend the market to my will. I practically demanded that it pay me every single day. And this brings us right to the specific traps that absolutely kill a novice trader's account. Overanalyzing charts is a classic one. It's a total symptom of thinking hard work equals profit. I used to slap 10 different indicators on my screen, hoping I'd just magically find some secret foolproof code. Then, to reach that $2,000 goal even faster, I started trading way too big. I was risking far too much of my account on a single idea just because I felt certain I was right. And when the market was quiet, forget it. I forced setups that didn't even exist just to feel productive. This, of course, inevitably led to a massive fear of losses, which totally paralyzed my decision-making. The source material hits the nail on the head here. It points out that all of these traps stem from relying on your raw intelligence to outsmart the market, rather than actually mastering your own emotional control. You see, you're never actually fighting the charts. You're only ever fighting yourself.
This concept from the Zen Trader is absolutely crucial to grasp. Why hard work backfires in trading and kills profits. In trading, hard work usually just manifests as overactivity. You know what I'm talking about. It's furiously clicking the mouse. It's switching between the 5-minute and the daily timeframes every 10 seconds. It's reading every single piece of breaking news on Twitter and just agonizingly micromanaging your open positions. All this overactivity does is create a really thick fog of anxiety. True consistency in trading, and specifically my own path to a reliable monthly income, didn't come from working harder while I was in a trade. Actually, scratch that. It came from doing absolutely nothing most of the time. And I cannot overstate how difficult this is. It requires a complete rewiring of your brain to understand that sitting on your hands, literally just watching the market move without you, is often the most profitable, highly disciplined action you can possibly take. Honestly, doing nothing is the hardest work a trader will ever do.
Moving on to Section 2. Trading is exactly like fishing, the core metaphor.
So to truly internalize this concept of profitable inactivity, we have to completely reframe our job as traders. You have to stop thinking like some frantic Wall Street movie character and start thinking like a master fisherman. The source material draws a really brilliant contrast here. Imagine an impatient amateur jumping into a lake, splashing around wildly, trying to grab fish with their bare hands. They're exhausted, they're frustrated, and they are mostly coming up empty. That was literally me in my early days. I was the day trader who was overleveraged, staring so intensely at a 1-minute chart, just sweating through every red candle trying to catch every tiny movement. Now, contrast that with a patient angler. The angler understands a fundamental truth. They cannot force the fish to bite. It's impossible. Instead, they calmly prepare their tackle, they find a high probability spot on the lake based on the weather and the water conditions, they cast their line, and then they just wait. They relax. They enjoy the scenery. The professional trader extracts a consistent income by operating exactly like this patient angler. Let's define exactly what patience means in this context, because honestly, it is heavily misunderstood. It's not just passively sitting around on your couch hoping for the best. Patience in trading is the active, rigorous discipline of preparing for profitable setups rather than desperately chasing them. It means your actual hard work happens entirely before the opening bell even rings. And this was the massive turning point for my own trading. I started spending my mornings mapping out key support and resistance levels. I was defining exactly what my risk parameters were going to be for that specific day. I was crystallizing what my specific, high-probability setup looked like. And once that prep was done, I had to exhibit the extreme self-control required to wait for the price to actually come to my predefined levels. If my specific setup didn't appear that day, I didn't trade, period. End of story, no exceptions. So what does this daily technical preparation actually look like in practice? Well, it boils down to a very simple 3-step angler's process. Step 1, prepare your strategy. This means clearly, unmistakably identifying your edge in the market. For me, that meant finding one specific price action pattern that I knew intimately and just ignoring everything else. Step 2, wait for the setup. Instead of staring at the chart for 8 hours straight, I started setting price alerts at my key levels. When the alarm went off, I looked at the chart. If it wasn't ringing, I walked away from the screens, literally leaving the room to go read a book, do some laundry, or take a walk. Step 3, let probability play out. Once your trade is triggered and you enter the market, your active job is done, over. You don't arbitrarily move your stop loss just because you get a little scared, and you definitely don't panic sell early to secure some tiny, insignificant profit. You have to let the math do the heavy lifting over time. Adopting this consistent, honestly kind of boring, repetitive process is exactly how I started marching toward that $2,000 monthly goal. Section 3, Psychology over Complex Analysis.
Okay, so there is this massive industry-wide misconception out there that you need some highly complex, mathematically advanced strategy to make money in the markets. But the reality presented in the source material relieves so much unnecessary pressure. Simple strategies consistently beat complex ones, I'm telling you. My early charts used to look like a full-blown laser light show. I had Fibonacci retracements, moving average ribbons, RSI, MACD, volume profiles, all just stacked on top of each other. But here's the thing. A complex strategy with 5 different confirming indicators requires so much mental bandwidth to process in real time. It leaves you completely, utterly, emotionally exhausted before you even think the buy button. And when you are emotionally exhausted, you make critical, stupid mistakes. Deleting all of those indicators and adopting a very simple strategy, like literally just trading basic horizontal support and resistance, kept my mind entirely clear. It allowed me to instantly recognize my setup, execute without a single second of hesitation, and keep my emotional energy reserved for the real challenge, managing my discipline.
And this brings us to the real balance of power in trading success. A staggering 80% of your success comes down to psychology and emotional control. 80%. Only 20% is the actual technical analysis, the charting, and the strategy itself. I mean, think about that. You could have the most accurate, rigorously back-tested technical strategy in the entire world, handed to you on a silver platter by a Wall Street veteran. But if you lack the emotional control to execute it, if you get scared and close your trades early, or you get super greedy and hold them way too long, that strategy is completely worthless. When I finally realized this, I stopped spending all my weekends back-testing new, crazy indicator combinations. Instead, to actually hit my financial goals, I started spending 80% of my time reviewing my trading journal. I was identifying my emotional triggers, and I was actively, intentionally working on my patience and my mindset.
Section 4, the math of trading small.
Listen, if you want to survive the brutal learning curve of the markets and eventually generate a steady side income, you absolutely have to understand the math of risk to reward ratios. Now, the traditional advice plastered all over the internet is that you should always aim for a 3-to-1 risk/reward, meaning you risk $1 to make $3.
Sounds great, right? But the source material points out a fascinating reality for retail traders. Aiming for a simple 1-to-1 ratio actually yields much higher consistency. But why? Because a 3-to-1 strategy inherently has a much lower win rate. You might win huge, sure, but you are going to lose often. And enduring a long streak of 6 or 7 losses in a row completely shatters a novice trader psychology. It certainly shattered mine. I would abandon my strategy entirely after a losing streak. A 1-to-1 ratio, however, gives you a much higher win rate. It builds your confidence. It keeps your emotional capital completely intact, which, as we just established, is 80% of the game.
And that leads directly into the principle that fundamentally changed my bottom line. Trading small is actually more profitable than trading big. Now, I know this sounds totally counterintuitive, right? Especially if your goal is an ambitious $2,000 a month. In the beginning, I really thought I needed to take massive, heavily leveraged positions to hit that target quickly. But when you trade big, the fear of losing that money literally takes over your central nervous system. Your heart races, your palms start sweating, and you inevitably make completely irrational decisions born out of pure panic. But when I finally cut my position size down, deciding to risk only 1% of my total account per trade, the fear completely vanished. The physical relief was immediate. I could comfortably let the trade hit my stop loss or my take profit without a single drop of emotional interference. By trading small, I actually allowed my statistical edge to play out, which paradoxically led to much larger, incredibly consistent profits over the span of months and years.
We definitely have to address this foundational quote from the Zen Trader material. Trading is a numbers game. Start acting like it. For a long time, I treated every single loss as a personal insult from the market, like it was a direct reflection of my self-worth and my intelligence. I had to learn to step back and view my trading as a casino operation. Think about it. A casino manager doesn't start sweating and crying if the house loses one single hand of blackjack to a tourist. They literally don't care, because they know they have a slight mathematical edge that will play out over 10,000 hands. You have to become the casino. You manage your risks stringently. You apply your simple, tested edge, and you just let the numbers game play out in your favor over a large sample size of trades.
Section 5. Mastering patient discipline. So, how do we tie all of this daily preparation and psychology together? We have the fishing metaphor, we know simple beats complex, and we deeply understand the mathematical power of small risk. The final piece of the puzzle to actually extract that monthly income is internalizing this one simple, powerful truth. The outcome of any one single trade means absolutely nothing. Let me say that again because it took me years to truly believe it. One single trade does not matter. Whether it's a glorious win or an annoying loss, it is just a tiny, completely insignificant data point in the long trajectory of your trading career. When you can successfully detach your emotions from the outcome of a single trade, you finally achieve the Zen trader mindset. You're no longer riding this exhausting roller coaster of euphoria and despair every single day. You are simply executing a business process.
The ultimate mindset shift is realizing that your next trade is not important. Your only job, your only true responsibility as a trader is to keep stacking trades that flawlessly follow your predefined rules. If you take a loss, you don't aggressively revenge trade to try and make that money back immediately. No. You just reset your mind, act like the patient angler, and quietly wait for the next setup to appear. Generating that $2,000 a month for me wasn't about finding one magical high-leverage trade that made me rich overnight. Not at all. It was the surprisingly mundane, cumulative result of stacking dozens of well-executed, low-risk trades over the course of 4 weeks. It was about trusting my simple edge and letting the math slowly and reliably build my account balance. It's a boring reality, honestly, but boring is what pays the bills.
Which leaves us with this final, vital question to ask yourself today. Are you fully prepared to stop chasing the market, put your ego entirely aside, and simply wait for your edge to present itself? True consistency and the ability to finally achieve that $2,000 a month goal, just like I did, lies entirely on the other side of that patience. The market will always be there. The water is waiting. You just have to decide what kind of angler you are going to be from this day forward. Thank you so much for joining me for this explainer. I really hope this deep dive helps you fundamentally shift your approach to the charts. Remember, keep your risk incredibly small, keep your mind clear of the noise, and just keep stacking those good trades.